Today we are talking inventory costing in Microsoft Dynamics 365 Business Central. Specifically, what we're going to be doing today is talking through the adjust cost item entries process inside of Business Central. So specifically, we're going to just supplement the blog post that exists on speakingbusinesscentral.com. And what I'm going to do is go to my blog post here and pull up this article. So this article's been around for many years. You may have seen this. I wrote this many years ago for Dynamics NAV. I've refreshed it in 2024 for Business Central. And it's called Adjust Cost Item Entries, what it is and why you need it for accurate costing and inventory valuation. And what I will tell you is that if your role has anything to do with financial reporting and inventory valuation inside Business Central, or your role requires the review and analysis of inventory sales margins and inventory costs, then you must be familiar with how Business Central values inventory and what this adjust cost process does and why it is so important. Okay, so today we're just going to literally walk through this article. I'm going to add some color commentary and some notes and tidbits here and there as we go through this to make sure it's perfectly clear what it is and why you need it. Okay, so the first thing is, Business Central offers a rich set of functionality, the ability to go back and backdate transactions, run inventory valuation reports as of any historical date that are fully reconciled to all of your reporting. This is huge, right? The ability to feel comfortable and confident that when you look at a report that those totals are up to date, they're current, they're accurate. There are no exceptions that you need to be aware of and why this number might not match what's reported in your financial statements. So very important. So Microsoft, right, we support, Business Central supports FIFO, LIFO, average, standard, and specific costing methods. Standard costing is primarily, a lot of manufacturers use standard costing so you can roll up an accurate standard cost. Specific costing relates primarily to serialized inventory items like uniquely costed pieces of equipment or machinery or vehicles and things like that. So we're kind of talking about really FIFO, LIFO, average in terms of this critical importance of adjust cost item entries. So the types of questions that might have led you to this very page, some of are here, right? Like, why do I see a difference between my original cost and adjusted cost on my sales invoice statistics? Why does it tell me my inventory costs need to be adjusted? Why is there a difference in my margins on this report versus what I see on my financial statements? And so on, right? All of these questions, right, relate to this process called adjust cost item entries. The name is not super intuitive, but it is what it is. It's been that way for many years. I don't expect it to change. So we just have to continue referring to it as the adjust cost process. Okay. So what is this? What it really is it is the process that ensures that all of your cost layers in Business Central, your inventory cost layers, are accurate. And this ensures that, one, your inventory valuation report is accurate and up to date, and two, that your cost of goods sold that are reported on your income statement and in sales analysis reports are accurate. Okay, so, or put it another way, let's just say here what this says is basically, I would assume this: if the adjust costs process has not been run recently in your Business Central environment, you should assume that the inventory valuation and cost of goods sold is not accurate. Okay. Now, it's very easy. So do you run this automatically? Does it need to be run manually? How often? On the inventory setup page, there are fields that control how often this process is run. My default suggestion for everyone is always turn on automatic cost posting. This will create the expected cost entries to inventory and cost of goods sold when you post a sales invoice, for example. And then the automatic cost adjustment field set to always will then immediately always run the adjust cost process. So your costs and your inventory valuation is always up to date. Now, there are other options on this automatic cost adjustment field, one of which I would suggest as the other alternative that you really should use is never. And when you should run never is only if you begin to see performance issues with the adjust cost process running when you're posting sales invoices. If you never see a performance issue, I would always keep this set to always and know that your inventory valuation and financial statements are always up to date and accurate. If you do change this to never, what that means is then you can either one, set up a job queue process that runs this process every night and it sweeps up all your cost adjustments that need to be made, or you can just run it periodically. If I'm the controller, I might just say once a week I'm going to go in, Friday afternoon I'm going to run it. Or I'm going to schedule it to be run on Saturday while no one's in the system. Or even just at the end of the month. The key is that before I begin running my inventory valuation reports and financial reports and sales analysis reports, I want to make sure that this adjust cost item entries process has been run. That's the thing. So if that's only once a month, then you really only need to run it once a month, and it will sweep up all those cost adjustments. This dives into a little bit more details on all of this. We won't go through that today. Let's get straight to an example here. So this is an inventory item, Cronus Light Lager, a 12-pack of delicious lager beer, and you'll notice the costing method is set to FIFO here, and the unit cost is $20. Now, when you're setting up a new inventory item, you will notice that the unit cost field is editable. You could type anything you want in there, and that will be then used as the expected cost on your inventory until you get some actual costs and run adjust cost on there. So we'll set that 20. Now you can leave it at 0, and then you just won't have any expected costs until you have cost layers and have run adjust cost. So we'll set this new item up at, we think it's going to be $20 for some of these when I buy them. So we'll set it to 20, right? Now on January 1st, we receive 100 of these at $20, our expected cost or the unit cost from the item card. What this will do is create a new item ledger entry reflecting a purchase receipt of 100 eaches at a total of actual cost of $2,000 or $20 each. Moving forward, now in this example here, it says up above that I have turned off adjust cost. So as we're running through this example here, we're going to manually be running adjust cost as we go through this scenario. So just keep that in mind that the adjust cost process is not being run after each of these transactions. Okay. Now, on January 15th, we receive another 100 eaches, and these are at $30. So just to make a nice clean example, that would be a pretty significant price hike in just 15 days. But just for the sake of this example, we're assuming that these 100 came in at $30. Right? So what you're going to see is a second item ledger entry now. I have two cost layers. I have the original 100 at $20 each, and then an additional new one here now on January 15th at $3,000 or $30 each. Right. Now we have not yet run adjust cost. When I go back and I look at my item card, what I'm going to see is the unit cost still at the $20 that I set it to originally, but it's now not editable because I have item ledger entries out there. And my last direct cost, what did I pay the last time I purchased this, shows correctly $30. Okay. Now, on January 16th, let's run adjust cost. So we run the adjust cost item entries process. When I run it, you can either run it for one specific item at a time if you want, or a category at a time. I'm just going to leave these filters blank, which means it will sweep up all my items, and it will also post any adjustments to the general ledger at the same time. So that's recommended. Okay, Now that we've run adjust cost, you'll notice that the unit cost on the item card has been updated to $25. Okay. So, and if I scroll down, yep. All right. So now this $25 is kind of basically a weighted average. So this is effectively looking at all of my on-hand inventory as of this moment, as of the last time adjust cost has been run. And it says your average weighted average cost for this item is $25. This is effectively the best estimate or expected cost that when we start entering sales orders for this, the best cost that we can expect, right? So now on January 31st, we enter a sales order for a quantity of 1 into Business Central. Now, what you'll see on the sales order is that there is a unit cost field on the sales order line. This is typically hidden from view on the page. You could personalize your page to add this field in here. I've added it on here for this, obviously for this example, just to show you that what's being populated into this unit cost is at the moment you enter the sales order line, it's using the unit cost from the item card to populate this field. It is effectively the best guess that the system has as of what the cost will be when we post this. And so the question here you might ask is, well, why doesn't it, if I'm doing FIFO, why wouldn't it guess $20? The reason is because I may be entering a bunch of sales orders for this item here. This sales order in particular may not be shipping for a while, whereas another sales order that I may enter after this may ship tomorrow and consume up all or most of that older cost layer, the first in cost layer, right? So the system's using the unit cost as the best guess or expected cost on there. If you open up the sales order statistics page, you see 2 cost fields here. You see an original cost and an adjusted cost. At this point, both are $25. It's the expected cost of this item. Right. Now on February 1st, we ship and invoice the sales order. This results in a new posted sales invoice. And what I want to point out here is on this invoice, the unit cost field is still $25. And this was basically copied from the sales order line. So it brings that over into the sales invoice. And if we were to look at the sales order statistics page, I see that the original cost is $25 and the adjusted cost is $25. Now, let's go run the adjust cost entry. Oh, first, before I go on, the item ledger entries. So a new sale, when I shipped and invoiced that, when I shipped the sales order, it created this new item ledger entry here. Since I've invoiced it, I now have an actual cost amount of $25. Again, I have not yet run adjust cost, but this is my best guess that unit cost from the item card, from the sales order and sales invoice line used from there. Now, on February 2nd, I run adjust cost. This is the moment where it says, wait a minute, my actual cost is not $25. We actually applied this sale to this specific cost layer, my first cost layer, right? So now when you look after I've run adjust cost, you now look at that sales shipment entry and it shows an actual cost of $20. It was $25 just a moment ago. Now it shows $20. And you also see that I have a remaining quantity of $99 on the older cost layer. So again, first in, first out in this example. Now let's go look at the item ledger entries and the value entries underneath it. So if I were to drill down on this $20 right here, what I'm going to see is 3 value entries. The first value entry is the shipment, where I had my expected cost of $25. The second entry is my invoice, where I reversed the expected cost and posted the actual cost of $25. And that did post that cost to the general ledger. The third entry was created by the adjust cost item entries process. The adjustment box is checked, and that indicates that to me. And I see here that the system made an adjustment to my actual cost of $5. This was what happened when it saw that it actually applied this cost to my first ledger entry. So at this point, all of my financial statements via this general ledger entry that got posted through the adjust cost process. Makes sure that my inventory valuation is accurate and my financial statements, my income statement, and my sales margin reports are also accurate. Now, let's go take a look one more time at the sales invoice statistics page. Now that adjust cost has been run, my original cost continues to show the value that was on that sales invoice line, the sales order line and invoice line. The adjusted cost shows $20, and that there was a $5 cost adjustment amount made when adjust cost process was run. One key note here, if you go back and you look at that posted sales invoice line, you will see that that unit cost field still reflects the expected cost of $25. So just please be careful when you're looking at your inventory sales margins and profitability reports. Do not just rely on the unit cost field from your posted sales invoices and posted sales credit memos. Make sure that you're referring back to the item ledger entries to capture the actual adjusted current costs that have been applied to that invoice. Okay, so obviously adjust cost item entries. It's necessary, it's mandatory that you're running it. You can just set it to always, make sure it's always running. If not, you can just turn it off, set it to never, and then just manually run it or set it on a job queue to run every night. But make sure that it's been run prior to looking at your financial statements. This process creates, we're not going to get in here, but all kinds of complex scenarios, including the use of item charges or right for full like loaded costing, the backdating of inventory entries, transaction reversals, credit memos, inventory revaluation entries, or other types of inventory adjustments. All of these things, you can always go back and make adjustments into prior periods, and the system reruns and recalculates to make sure that everything is accurately costed and valued throughout the system. It's very powerful. It's very easy. You just need to make sure it's running. Again, whether you're doing it always or once a month, just be sure you're running it. Please subscribe to this YouTube channel. Also, please subscribe to go to Speaking Business Central and subscribe for more updates on new content. Thank you very much. I hope this was helpful.